There we go. It helps to turn the mic on. Welcome back, everyone, to another market stream. This time coming to you on a Sunday because we've got some crazy crypto madness going on in the market right now. We've got a little bit to talk about and kind of what this might mean for the broader market. We don't have futures open yet for the stock market. Obviously, we've got, let's see what we got. Another, if we go through a quick what I'm reading out there, some notes that I'm seeing on what might be causing some of this madness. Obviously, we've had quite a bit of a sell-off within the last really 12 hours here, 12 to 24 hours in the crypto space. We have been rebounding a little bit. But it's been tough to hold on to. So we'll start at the sticks here, and then I'll get into some of the theories behind what exactly is happening, why is it happening. So we'll try to figure this out. All right, let me quickly turn on the chat here correctly. So there we go. Chills out a little bit. Okay, so let's look at the sticks first, and then we'll go ahead and get into some of what I'm seeing out here. So here is Dogecoin. We can see if we go, let's go pull out here to the 30-minute chart. You can see this sharper sell-off here. And again, it's interesting. This is where the technical analysis non-believers should really consider paying attention. These lines we've had drawn for many, many months here, and we've really been bobbing up and down this 33-cent line right here. And Doge literally just plummeted down to the line that we had drawn around 25. See, it's not perfect. We've had this drawn before. You know that's true from my prior videos. These lines are at this point probably 5-6 weeks old. But anyway, we've almost got a perfect bounce off of this low over here. We're teetering a little bit right now. If we go to the 5-minute, we can see we're teetering a little bit here, a little bit of an overbounce or sort of almost a breakthrough, but we didn't get a full candlestick breakthrough here on the 5-minute. Let's go to Ethereum. So Ethereum's in this sort of interesting middle ground. Let's go to the 30-minute to start with. Ethereum has been one of those. Where all of our lines are gone Ethereum. Oh no, here we go. Oh, okay. It's been a while since. Actually, I don't know that we've drawn lines on Ethereum. Anyway, we know that we've previously talked about how we've had support levels around that 2400 level, and this is kind of where we've been holding, is that 22 to 2400 range. This is where things have held for a few days after the sell-off started. Tuesday evening going into Wednesday, Thursday, we really had that crypto sell-off start. We've been holding around that 400 range, been bouncing up, we saw it go to 2900, we saw it go 28, bounce around. But now we've completely broken through that. We are down well below that. Right now we're sitting at 1923. We have a very similar pattern amongst all three of these larger cryptos here. Very similar pattern, but even though we have bounced off the sort of lows that we've hit today, just in the last few hours or couple hours here, really, we are starting to trend down again despite this bounce. And really, this same pattern can be seen over here at Bitcoin. Let's go out to the 30-minute. Looks like we've really taken off from these levels where we've previously sat. In the upper 40s, we did notice a support level around the low 40s briefly. But a concern that we were talking about last week was that if we break through the relatively weak support that we have in the low 40s, we might be going right back to the low 30s. That's what started happening last week. We broke down to 33. I was a little shocked that we didn't really stabilize around 32 to 33 because we mostly stabilized around 36 to 38. That's where Bitcoin had really been stabilizing. And I thought we were going to stabilize closer to that 32 range, which is really more of where we're balancing right now. So it's really interesting to kind of see the dynamic between these three coins, but they're all following a similar pattern here. And I think really the big question is why are we seeing this, and what are some of the wider things going on? And so what are some of the things that we're not seeing mentioned out there? So I want to touch on specifically those things that aren't already being mentioned. Look, we already know about the triple FUD, right? We've talked about the triple FUD. We know the IRS is wanting their tax money. They want to track transactions over $10,000. That's just part of really anything that's, quite frankly, a currency becoming more adopted to mainstream. The regulators want their tax money, right? So, I mean, that's not a surprise. We know the China FUD is an issue because we have so many miners in China right now. And so China cracking down on mining and trading is a real issue. And then you also have the environmental and social and sustainability concerns the ESGs, which has really been highlighted by Elon Musk. Now, Elon Musk may not be an, I think it's a little oversimplified to say Elon Musk's tweets are the reason for a sell-off, but I think Elon Musk's tweets have sort of lit that match around energy. And what happens when that when something like a catalyst, like an Elon Musk bagging on something he was previously supportive of, what happens then is you get a lot of hedge funds and institutions that begin to short and hedge their positions. And so my expectation is a lot of what we're seeing is really hedging continuing to be very, very profitable. And this is exactly what we saw in the tech space. It's not unique at all to crypto. This is literally what we saw in tech and certain consumer discretionaries starting March 19th. March 19th for really the last 3 months now has been this oversell of tech, certain consumer discretionaries. And to me, we've been talking about this even before this crypto sell-off over the last few weeks. We've been talking about it wouldn't be surprising to see other sectors begin to roll over as well. And now I want to also talk about some of the recent research here, so we're going to get to that. But quickly to explain the rollover of other sectors, think about it this way. If you've got, if I like to think of it as almost kind of like pegs, or you're playing whack-a-mole. Okay, that's probably the easiest way to look at it. Say you have a board, and then all of the whack-a-moles are kind of coming out of the machine, and they're all up. And the first one to really get whacked was tech and some consumer discretionary. And now it's like, okay, well, that one's down. Like, how much more can we hit that one? It's in the hole. You know what I mean? And so now it's crypto's turn. And so it sort of begs the question of, okay, well, what about the other moles? Is the real estate sector going to get whacked? Is the healthcare? Well, the healthcare sector has also already gotten wrecked. How about the recovery stocks? Are they going to get whacked as well? And so it does feel a lot like this game of whack-a-mole. And the people with the hammer are the hedgies who are shorting and hedging their positions. So this is an ongoing belief that I have, that sort of this broader market rollover, really catalyzed by the incredible fear and uncertainty that even central banks have around the future. Like, hey, did we overstimulate? Are we going to have hyperinflation, or is this transitory, right? But beyond that, here's a little bit of research that I have on cryptocurrency. I was doing a lot of reading this morning. And one thing that I found that was very, very interesting was a particular stat here. And let me find it. Okay. Oh, here we go. All right. So there was a chain analysis report that showed that over half of the $410 billion spent on acquiring current Bitcoin holdings occurred in the last 12 months. About $110 billion of that was spent on buying it at an average cost of less than $36,000 per coin. So if $110 billion was spent buying Bitcoin under $36,000 per coin, that means $300 billion, which is roughly 75% of all of the coin activity on Bitcoin, was spent when Bitcoin was above $36,000. Now, why does this matter? Diamond hands, right? Well, not necessarily. See, here's a funny thing that happens with people and psychology, and this is something I teach in the Stocks and Psychology of Money group too. It's why psychology is so important when it comes to investing. So my belief is that, let's say you bought Dogecoin at 5 cents, okay? So Dogecoin at 5 cents. And Dogecoin goes to 74 cents. In a weird way, you don't feel like you have to sell because you're still way in the money. Right? You bought it at 5 cents, you're at 74, you don't have to sell. Goes to 64, hey man, diamond hand. Come on, diamond hand, right? Goes to 50, it doesn't matter. I'm buying the dip. Goes to 30, don't worry, it's just a temporary oversell, right? And really what happens is you start getting this collapsing of valuation. And the downside that can begin to occur is, what happens when maybe you didn't buy it at 5 cents, but maybe you bought Dogecoin at 40 cents? Your period going from 70 to 60 and 60 to 50, or even 50 to 40 and then back to 50. Oh man, diamond hands, no problem. But what happens when you start losing your real money? When the person who bought at 40 is sitting at 29 and you're well upside down, or when the person who bought it at 5 cents is now sitting with the valuation at 1 cent. This is when you start getting really massive issues with people who recently bought, because for some reason, when we invest in something and we make money, we have this belief that, oh yeah, I'm owed that money. But when prices fall and we start losing the money that we actually made working our butts off day in, day out in this country, it starts getting a little bit more personal and we start getting a little bit more pissed. And guess what happens? Every freaking night you go to sleep and it's just like your stomach churns over, oh my gosh, it keeps going down and down and down. That wears on you. Remember, folks, stocks and psychology of money. What happens when your back is against the wall? In real life, fight or flight. Okay? You can't fight prices falling in the stock market. There is no fight or flight. The only option you have in stocks is sitting with your back or standing or whatever with your back against the wall and continuing to get beat up. That's it. That's all you have. That's like your option. Or you flee and you sell. Now, you could try to protect yourself and maybe block some of those punches by hedging, right? But you're still getting your butt kicked overall on your longs. So this is bad. It's very, very bad for folks' psyche. When people start losing their actual money, there is a real potential for further sell-offs. And now we'll see. I mean, we're stabilizing a bit right now, although we if we're on the 5-minute candles, still trending a little bit to the lows of the day. We're off the lows of the day. But again, I want to make this clear. A midweek report from blockchain analysis firm Chain Analysis showed that over half of $410 billion spent on acquiring current Bitcoin holdings occurred in the last 12 months. But more importantly, $300 billion was spent on Bitcoin at a price of over $36,000 per coin. And so this actually increases some of the potential volatility going forward even more. And speaking of volatility, there's other research that I did here. Next time I need to organize my notes a little bit better. But here we go. Look at this. A measure of implied volatility on Bitcoin compared to the U.S. equity market's VIX. We look at this all the time, right? The volatility index, CBOE. Like, oh my gosh, buy it when it's peaking, right? Quite frankly, last year would have been a great strategy. Every time the VIX spikes, that's when you know to buy. When the VIX isn't spiking, you just don't bother. Well, usually our volatility index is sitting somewhere between 18 and 24 in the stock market for, like the Dow. Okay, well, the volatility index for Bitcoin has been sitting at a 30-day average of 100. So that's like 4 times more volatile than the stock market, okay? But beyond that, the measure currently sits at 130. So it's even more volatile than the average we've had over the last 30 days. Now, I mean, that does create the potential for, hey, well, I mean, if the volatility index is jumping this high, maybe it's time to buy the dip. Maybe. But know that at least with Bitcoin, you've got 75% of people who are actually losing their real money now rather than just their paper profits. And when people lose this is a good bottom line to remember, right? When people lose their paper profits, no big deal, diamond hands. When people start losing their real money, the concept of diamond handing doesn't seem to apply anymore. The fear takes over, and the preservation of what they have takes over. Whatever. This is when the true paper handers come out and the true diamond handers come out, right? All right. So let's go ahead and go to CoinMarketCap. I want to see what else is going on here. But this is important to know. Oh, I do also want to say this is also very important. Pull this up here. Oh yeah. Yep. All right. Hold on. I'm going to pull this up too. See, here's another big issue. So in addition to the issues that we just talked about, which are very important. So if you're just now joining, you really ought to rewind. Very, very important discussion on what's going on. All right, here we go. So, all right. Central bankers are already wondering or potentially beginning to wonder if the next crisis is around the corner. Now, why would we think that? Everything seems to be generally on the up and up with the exception of the madness and uncertainty regarding inflation. True. But the problem is, central banks around the world, specifically in Germany, the Bank of Canada, and the European Central Bank, are starting to realize that maybe, just maybe, we went a little too far, creating a few too many bubbles. Wow, imagine that. Central banks starting to realize they created too many bubbles. Now, that's a little bit concerning because it certainly sends a signal that, what does that mean for the United States? Does that mean we're going to raise rates sooner? Does that mean we're going to taper sooner? Maybe. No, we've already had the Fed start laying the groundwork for, okay, maybe it's time to start talking about raising interest rates. It's an issue. And the problem is it's all coming during this time, this maddening time of peak doo-doo, I like to call it. Really, peak doo-doo is when you have the convergence of Q1 earnings guidance suggesting a slowdown at companies, inflation presently expressing itself very, very clearly with rising prices at almost all aspects of our lives, used cars, groceries, energy, you name it. Commodities, goodness gracious, look at, I mean, lumber has cooled down lately, but still incredibly high. uh, it's just wood and gold. But anyway, so you get this convergence of okay, wait a minute, did we overstimulate? Oh my gosh, maybe there is lots of inflation, which is clear, there is a lot of inflation right now. And wait a minute, maybe this means we do have overvaluations of sectors. Okay, whack-a-mole on healthcare and the biotechs, whack-a-mole on the technology and some consumer discretionaries, whack-a-mole on the cryptos. I'd be worried about the other ones. What's next? Like, does it, in my opinion, does it make sense right now to be concerned about Tesla? Not really. It's given up 40% from its highs. Usually the rubber band doesn't go much further past that. Not saying it can't, but usually it doesn't. It's really the sectors I'd be concerned about right now are the ones that haven't really sold off yet. The highly indebted recovery stocks, as an example. But anyway, central banks are certainly starting to express more concern than we've had them express in recent months, which is a problem because now you're combining market valuation FUD with crypto. Well, I shouldn't say FUD. I mean, it's just straight up fear at this point. Market valuation fear with crypto fear, with inflation fear, with central bank fear. You have a lot of people just shaking right now and trembling in fear. And that creates a very, very difficult market because, the folks who buy the dip run out of money. And then it just kind of sucks, right? And so then you have the folks who do sell who temporarily feel better, but generally in the long run get very disappointed that they sold. But the selling happens anyway, specifically driven by hedge funds because they don't want to lose clients. I guarantee you, with the amount of fear that's going on, guaranteed, okay, every single fund manager in this country and around the world is getting phone calls. Hey, are we protected against a collapse in crypto? Are we protected against a collapse coming to recovery? Are we protected against a further collapse in tech? If those firms say, yeah, no, we're not hedging, they're going to lose those clients. Those clients are going to take their money and run because everybody's got this mindset of well, you're gonna have the best strategy today and always. Don't work that way. But that is something that certainly has the potential for really depressing the market further. So it's really, really big issues. I mean, this is how the market works. It gets fearful, at first in small areas, and then it broadens out, and then the entire market gets fearful. And I expect this fear to continue really until September and October. I feel like I'm beating a dead horse by saying that over and over again. I wish I could tell you it was going to be shorter, but I've literally had the same message for the last 3 months. Let's wait for September and October. People ask me, well, then Kevin, why don't you sell and then just buy back in then? Well, because I don't know perfectly when the U-turn is coming. But I know we're right now. Look, we haven't found. It's kind of like in Minecraft, okay? I haven't found my ladder to get out of the Nether yet, so I feel like I'm in hell. But one of these days, I'm gonna find that ladder. I just don't know when that day is gonna come, and that ladder can go up pretty dang quickly. All right. Anyway, so BTC down about 30% here in the last 7 days. Ethereum down 45% in the last 7 days. I did my first purchase of Ethereum right around 2,400, where we did sit at a resistance level that we were watching. Honestly, I did not expect a 1,900 to be a resistance level. I thought it would actually go down to 1,300 if we broke past this. So let's go ahead and look at the charts here. Apparently, CoinMarketCap is loading so slowly. I can only presume because of the madness of what's happening here in the markets right now. But let's go to the 1 week chart here. So what do we have? Well, that's an interesting little point where we have here. So yeah, my expectation was right around here. Here was another smaller support level, but I could see this. Let's go ahead and draw a little bit. We should draw it on Webull. Let's grab Webull. Because the problem is with CoinMarketCap, it doesn't stay. I like the diversity in coins that I can get at CoinMarketCap, but I also like that my lines stay because they really help me show long term. And Ethereum's one we've never really drawn lines on. We did a lot of that on Doge and some on Bitcoin. So we're sitting here right now at 19. I could see this prior resistance potentially being a support right now, but I do believe this is weak. I really think this range right here is a more powerful sector where we really balanced here for about a month around this $1,300-$1,400 range. And so I'm going to draw, we'll draw sort of a soft line now where we sit now. But more importantly, I think the more important line is right around here, 1,300, because this we're on the week chart right now. I really think this right here is a very weak support level. I personally don't know how long this. It's either we bounce off this quickly, or we we head back to that 24 range, which we see better on the day chart. Let's zoom out a little bit on this. So we either bounce off this quickly or get back to that and get back to that 22 to 24 range. Or potentially, I think 1,300 could be in store. And this is something that I'm not just saying today. It's actually something that I've talked about regularly in, for example, you could see our Millennial Money podcast. I talked about the same thing last week. This is sort of where we hung out for a few days. We dropped down, bobbed around that 22 to 24 level, which is really this range right here. This is where I'd been expecting us to be range bound. Right around, yeah, 23, somewhere around here. Yeah, because you could kind of really see resistance here, support around in this range here. That 22 to 24 was really a range that I thought we'd be sitting in. But if we continue to sit around here, which I think this 19 is a very weak support, I am concerned that we're heading to that 1,300 range, which is very possible for Ethereum. Keep in mind, look at the gap up that we had to 1,300 as well. I mean, we gapped up to 1,300 from the low few hundreds. So we don't want to continue to break through support levels here. Doge is a little bit more difficult to look at on a week chart. We really have to almost look at it. Well, certainly the day chart would work. But more recently here, let's just go to the recent 5 minutes here. We are recovering slightly from this bottom that we hit today. Bottom we hit today was about 2480. Wow, 2483. With Ethereum hitting this bottom here at 1731. And Bitcoin hitting a bottom here of around 31,000. Let's look at some other coins here for a moment. There we go. All right, let's see what else is happening at some of these others. All right, so Bitcoin, Ethereum, Doge, slight rebounds here. Wow. We're 116 on Cardano. Oof. Yeah, Cardano has been one of those that I've really been looking for at sub 130. I'm a little bit concerned though because I thought we would have had more of a support at 130. Yeah, look at that. We had a temporary. We sat here for a couple hours. We sat at the support level I expected of 130. But folks, we smashed that support level. I mean, we're sitting at 116. My goodness. Now we are having a temporary rebound. Some incredible volume here. But wow, I don't know that I see 116 as a real longer term support level here. I'm a little bit concerned we might be, the next level is somewhere closer to $1 as where we've bounced off before. $1, $1.05, $1.08, 93 before that. But 116, I don't know. I mean, maybe you could kind of see the support. Yeah, you could kind of see that here in March. But we're definitely in a very bizarre situation right now. And I think the speed of the drop that we've seen here definitely leaves some concerns on the table. So I will take for a moment a peek here at some of your questions. Let's see what kind of questions y'all have. Did Sheeb really get crushed? Let's take a look at that. It does not surprise me that some of the smaller coins are likely to have gotten destroyed here more heavily than the larger ones. Litecoin's down 56%, Uniswap down 57%. This is on the week chart here, right? Ethereum Classic's down 50%. Wow, that's incredible. 50% on Sheep as well. Yeah, this is a very, very interesting U-turn in just the broader crypto space. Yikes. Oh, Carlos, that's interesting. So Carlos is indicating the 30% hash rate drop from the mine flood was a 30% drop in Chinese mining activity. We'll definitely have to look into that. Thank you for that. All right, let's see here. Any other question? When everyone is fearful, be greedy. Yeah, there's your classic Warren Buffett quote. Though what I've learned very, very quickly, what I learned in the February, March, and April 2020 sell-off, generally people say that quote and don't act. It's very common. I've been acting on it religiously over the last few weeks, and it can be very painful because it's almost like you feel like you're throwing money into a fire pit, right? You buy and then it keeps falling. It's very, 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 very painful. How am I doing mentally after a long week of governor stuff? Honestly, the governor stuff has been some of the most exciting and fun that I've had in a while. I think we can only hope to maintain the momentum that we had last week, this week, and so we've got some big plans coming. Specifically, we want to do more rallies. We did one yesterday in Venice Beach. It was phenomenal. A lot of people showed up, a lot of support, a lot of people very frustrated with California. A lot of folks who don't want to leave California but are or feel like they're forced to. All right. Yeah, a lot of altcoins getting pitched here. Yeah, it's a normal Bloody Sunday. I think it's maybe a little bit beyond a normal Bloody Sunday. Just feeling a little bit beyond that. But the volatility of decline that we've had here has been incredible. The volatility index on cryptocurrencies has peaked about an hour ago. So there is an argument that, hey, maybe the best time to have bought was an hour ago, and that's it. The dip is over. But there are some serious concerns over the fact that, the statistics that we mentioned earlier about folks losing more money than they've invested, and 75% of those being in those, or 75% of recent Bitcoin investors being in that situation. That creates problems. People do not like losing their money. So make sure to watch the first part of this live stream where we really go into some of these statistics and some of the other issues that are going on. Oh, thanks for saying that, friends and loved ones here. Kevin's trying to change California, but ultimately he's going to change the world. Hey, if California can be a model for the world instead of embarrassment, I'm all for it. And I would be happy to make that happen. Anyway, folks, thank you so much for being here. Hopefully this added a little bit of clarity in terms of the madness that is going on and the psychology behind what's driving this sell-off. So I don't think we have core fundamental risks here, but we've got another long road ahead of us before we really get with certainty out of this mess, is my expectation. So do plan on these emotional days. Anyway, thank you so much for being here, folks. We will see you in the next video. Thanks so much.